Hi, my name is Peter Merson. I live in apartment 8T, and I've lived in the building for 35 years. I was also on the board of directors from May 1999 through May 2009, 10 years. What you're looking at here is something I thought would be interesting, putting 35 years of River Edge's own audited annual reports into an easily accessible interactive format every year from 1990 through 2024. I'll be adding 2025 when it becomes available. Before I show you what's here, let me show you exactly what numbers were selected from the audited annual reports and why. Okay, if you go down the page here, financial category descriptions. Okay, on the left-hand side, we have 8 income items. In the middle column, we have 11 expense items. And the column on the right, there's 4 additional items. Capital expenditures from the cash flow statement, cash and equivalents from the balance sheet, reserve fund from the balance sheet, and mortgage principal payments from the cash flow statement. Mortgage interest is on the income statement and is already captured in the expense column. Every one of these 23 items has its own row in the matrix and its own 35-year trend chart. All 35 years of the audited annual financial statements are listed right here. We've got 10, 20, 35 years, and all you need to do is just click on the file and the complete audited annual reports are all listed right here if you want to look at the source. This is the interactive matrix. Every row is a financial category. Every column is a year. 35 years across, 23 categories down. And what you can do is set the date range that you desire to look at. You can choose any range between 1990 through 2024. Either one of the 35 years or all of them. We're going to select all of them right now, if you'd like. Well, that's what we're going to do. And also an interesting thing here is we have a CPI, Consumer Price Index overlay. Like, for instance, if you're looking at, let's take something realistic. Let's look at payroll. If you look at payroll on a chart, it really doesn't tell you that much. It's just a line on the page. But in order to make it more meaningful, what you should do is compare it to something like a yardstick, like the Consumer Price Index. So if you click it on, you'll notice here that you have a dotted gold line. It tells you that the payroll and related costs for the 3 people that work in our building very closely followed the Consumer Price Index over the last 35 years, which is pretty much what I would expect to see. But let's move on here for a second. What I'd like to show you is the income versus total expenses. And we want to show that as a line graph, which we have here. It's a bar graph. It's not as effective, but it's a line graph. It's a little more effective. And we also want to include the mortgage principal costs so that we show the total income correctly and, well, total cash flow correctly and total expenses correctly. So green is total income and the red is total expenses over 35 years. The little gold diamonds here indicate that there is an underlying memo or situation under there. You can just click on it and you will get the actual memo that was written that caused the change. The memo right here which kind of jumps out at you represents 2006. I realize to some of you that's ancient history, but this one particular year had a significant effect on River Edge. It was the largest maintenance increase in the history of the co-op, 17%, and in that year, it also produced the highest net income or surplus. And as you can see, that significant surplus continued on for quite a number of years. Now, if you want to look at this from a different perspective, what you would do is look at the net income or loss in a bar chart form. And again, make sure that you include the mortgage principal, what we have. And there we have 2006, the largest surplus in the history of the co-op. And we have a number of very significant surpluses here for the next 19 years. A loss in the year 2024, but there were specific reasons behind that. Now, if you add up, excuse me, all the bars from 2006 through 2024, you'll come up with $4.2 million, which is a considerable sum of money. That would be equal to charging everyone $2.60 a share per year for 19 years to come up with $4.2 million, just as a for instance. And it's arithmetic. So, in order to come up with $4.2 million, well, the question you might ask is, if we did generate $4.2 million, Peter, where did it go? Well, there's two things that happen with cash. Usually you either spend it or you save it. So if we spend it, if the co-op spent it, what you would do, it would go into the capital expenditures. So let's look at a bar chart of capital expenditures over the 35-year period, but we'll focus on 2006, which is right here, through 2024, which is over here. And the dotted line represents cumulative capital expenditures. So from 2006, cumulative capital expenditures, $32,000, and we end up at cumulative capital expenditures 2006 to 2024 is $2.5 million. Okay, so where'd the other $1.7 million go? Well, like I said, you either save it or spend it. So total liquidity is the sum of cash and reserve fund balance at the co-op. So if we start out at 2006, excuse me, it's zero, and then we continue on, what is the change year by year? Well, it goes up and up and up. And in 2021, we actually had $2.3 million more. In 2024, we had $1.7 million more in the cash and reserve fund than we had in 2006. So 1.7 in increased cash and reserve fund balance plus 2.5 million in capital expenditures equals the 4.2 million. That's where it went. Now, there's one point you want to remember. Since the co-op's cash and reserve fund balance has increased by 1.6 million or 1.7 since 2006, you have to remember that the board of directors has indicated they want a $1 million assessment starting in July of this year. From my perspective and my point of view, I've already paid it, along with everyone else in the co-op, when I look at the cash balance. And to that end, I sent a letter to the board of directors, which is right here. To board of directors from Peter Merson, April 2026, objection to the proposed $1 million special assessment. Okay, I list 1, 2, 3, 4 reasons, and I'm requesting that the assessment be put on hold, and that if and when the co-op balance reaches $750,000, then we'll reassess the need for an assessment. So, if you agree with my point of view, I'm going to bring this up at the annual meeting. So, if you agree with my point of view, I appreciate it if someone would second the motion, and then if there's a vote, if you agree with me, we can all vote in the affirmative. What I also have here is memo versus results. When the numbers tell a different story. The audited annual reports exist so that any shareholder can verify any claim at any time. That's one of the main reasons I did this. Most people don't look very closely at their audited annual reports, so I thought I'd make an attempt to make it easier for everyone. There's two memos specifically mentioned here, the one in 2006, the record increase, and there's another memo I mentioned here in 2023. If you'd like to, there's a lot of detail to read through here. If you'd like to, read through it. One more tab worth mentioning here is, I'm sure most people are not aware of it or haven't really thought that closely about it, but since 2023, there have been 3 maintenance increase announcements and 1 parking fee announcements. 9% in 2024, 1.5 in 2025, and 4% in 2026, plus 25% parking fee increase in 2025. And if you add those all up, that adds up to slightly more than $250,000, which is a significant amount of money, which brings me back to the need for the not having a need to have a $1 million assessment, because we should be able to replenish any reserve funds with the significant increase in the maintenance and parking fees that the co-op will now be taking in. So that's pretty much all for now. If you have any questions, my contact information is down here at the bottom. Feel free to go through the matrix. You can't break it. Just remember, you can set the date up here. You can include or exclude. If you exclude the mortgage principal, the net income will be equal to your audited annual reports. But if you include it, it will be off by the mortgage principal costs. Just keep that in mind. And keep in mind the CPI overlay. It's a very handy thing to use when you're measuring various things. And again, you have the option of a line chart or a bar chart, and you can make these larger or smaller, however you choose. Oh, you can also print. You have a print function here. And if you want to actually go and look at your own apartment, I'll select mine here, 8T, 544 shares. My unit view is on. Okay, that breaks everything down to me with 544 shares on the wood side, 1 bedroom. I have 0.64% of the total shares. And so feel free to do whatever you want. If you'd like to see something that you'd like to have and you don't have, let me know. Bye.